My next guest is a CEO who's not yet in the recession camp. Joining me now is Ron Kruszewski. He is the chairman and CEO of Stifel. Ron, I've been looking forward to checking in with you, especially, I thought if you came on when we were down 1,000 with some concern, then I thought, well, if you come on when we're positive, that would be, and now we're negative again. So it just goes to show these are crazy times.
Great to see you, Kelly. Yeah, it is kind of crazy times, but not really that unexpected, to be honest with you.
Really? You think so?
Well, look, at the beginning of the year, we had the lowest S&P forecast of any firm on the street. We're at 5,500. We said then that valuations were high and there was going to be turmoil in the market, primarily the threat of tariffs that we thought would be inflationary, tie the Fed's hands, and we just thought the market was priced to perfection then. Now, what has happened here has happened very fast, so much faster than we thought. But the basis that this was going to kind of happen, I mean, President Trump ran on this. So let's not lose sight of that. Now, furthermore, I would say, Kelly, that what is happening here is the first big step to a recalibration of trade policies that have gotten unfair to the United States. It's a huge step, but the president's transactional. He carpet bombs first and negotiates second. And that's what we're seeing. So you got to be a little careful not to think this is the new normal. This tariff situation is not the new normal.
I'm glad that you said that. I want to come back to that. But you guys have a lot of skin in the game as kind of a deal firm, advisory, investment banking, and so forth, where we've really seen a stall so far under his administration. So when you're kind of advising or positioning the firm, and when you say, look, you got to take them at their word, this is what they're doing, that could further interrupt business for the duration of the year, right?
I do. I mean, I think that this is not normal politics. Normal politics we'd have 10 state dinners to move the needle 1/100%. This is a much more in your face, we're going to get it done approach, and it's causing some short-term pain. But look, we were talking 2 months ago, Kelly, about the unsustainability of the U.S. twin deficits being trade and the budget deficits. Interest exceeds defense spending. A lot of these things need to be recalibrated, and this is just, business approach in politics, and a lot of people aren't used to it.
So to put it a little bit more bluntly, and maybe this is unfair, but if you kind of see what they're trying to do and understand how it could hurt business, I mean, would you go so far as lay? You don't want your staff to sit around doing nothing, right?
We're busy. I mean, look, right now is the time that we need to be talking to investors. We cautioned investors at the beginning of the year that valuations were extended. We're telling investors now that it's a time to wade into stocks. A typical recession would take the S&P 500 to 4,400. 4,400 from the high of what was 61, 40, or 50. So the market's telling you a 60% chance of recession. But I will tell you something, the upside from here now is where you would wade in. There are some great companies on sale in the United States right now.